Hey guys, Sean here. It's undeniable. Chinese and US relations are going down the drain as Chinese companies are getting delisted from the New York Stock Exchange. And this is one of the many steps both countries are taking to separate from each other. But this time, America is serious about widening the rift. And this could topple both the Chinese economy and cause a lot of financial pain in the United States. So just a few days ago, we had 5 Chinese companies confirming their exit from the US stock market. We are talking about big state-run giants including PetroChina and China Life Insurance. Now, these are hundreds of billions of dollars about to leave the United States, and this is going to be a disaster for China. But why does this matter to you? Well, China's already in a very fragile state with their real estate crisis on the verge of collapse. And if decoupling is the last straw that pushes China off the edge, the whole world will be affected to a great degree. So the Chinese dream has always been about propagating China's greatness to the world, and the most effective way to do it is through financial power. And that means building huge companies that can really expand internationally. But in order to grow fast, companies need capital, and they need to be listed on the biggest stock exchanges possible. So if we take Sinopec, for example, one of China's biggest oil companies, they are listed on 3 different exchanges: the Shanghai Stock Exchange, the Hong Kong Exchange, and the New York Stock Exchange. However, the one in New York is home to $27 trillion of market cap compared to Shanghai's $7 trillion. And by delisting itself, Sinopec is leaving a lot of investor money on the table. And that's why we have companies like Alibaba freaking out and dropping in price when they enter the watch list. Now, this decoupling in the US stock market alone is going to stifle the growth of Chinese companies and raises concerning questions. Why are Chinese companies so afraid of being audited? Is this really a national security issue, or are there deeper problems going on? Now, obviously, this is going to hurt American investors who want to benefit from China's growth. Prices normally fall after delisting because not all investors want to swap their US listed shares for Hong Kong listed ones, if that's even possible, right? So investors lose money. However, China will be hurting even more. Investors thinking of sinking money into Chinese stocks are going to think twice. We even have a long-time China bull, Ray Dalio, selling all of his Alibaba shares because he's afraid of how bad this decoupling will get. But this is just the tip of the iceberg. This separation has been happening for a long time in the currency markets, with China dumping US treasuries. And if there's ever going to be a war with China, it's likely going to be a currency war first. So right now, the US and China have a very weird trading relationship. The US loves cheap goods from China, while China loves US dollars. They use it to buy US bonds to keep the Chinese yuan suppressed so they can sell more stuff to the world. It's a win-win scenario, but right now, China has been dumping tons of their US debt month after month until it's below $1 trillion today. And this accelerated from February this year after the Russia-Ukraine conflict started, and especially when the US froze Russian assets. But China dumping US treasuries is like cutting off the nose to spite the face. If China does decide to fully decouple from holding US debt and dollars, it will unleash tremendous pain on itself and change the financial landscape forever. You see, by dumping US treasuries, the yuan will become stronger, and as the largest exporter of goods to the world, Chinese businesses will suffer and their GDP will shrink, possibly towards a nasty recession, something that they don't really want to face, especially when they are tackling a banking and real estate crisis today. While it all started with Evergrande's $300 billion debt default, this has spiraled into bank depositors losing their money and homeowners boycotting their mortgage payments. Even the S&P ratings agency is warning that 20% of Chinese developers are at risk of insolvency. So if China's economic activity slows any further, this could collapse the entire property sector, and a real spillover could happen that will impact the banking sector, steel producers, and engineering and construction firms. However, China is running out of options if they really want to take back Taiwan. They know that there's a chance that the United States will freeze their dollar assets if an invasion happens. So where will all these excess dollars flow to? Now, the most obvious channel will be gold. China's been buying gold for decades, and its appetite is still strong even during the 2020 lockdown. So if the decoupling accelerates, we can see gold coming back as a winner, and China will likely borrow a page from the Russian playbook and store their wealth in the precious metal so it can't get confiscated away. They can always sell it off in the open market for foreign currency or commodities directly. Now, America is still not off the hook. Since the start of the year, the foreign treasury holdings have been falling from 7.6 trillion to 7.4 trillion. And while this might be small, this is bad news because if China dumps their debt, this will cause bond yields to skyrocket. And this means the United States won't be able to borrow cheap money and debt repayments are now more expensive. This will affect the rest of the debt market for companies and suddenly we'll have a further slowdown in the US markets. And we are currently sitting at 2 negative quarters of GDP growth, which is a textbook recession. So if China exits treasuries completely and other countries don't step in to soak up the $1 trillion worth of debt, we could see rates on a 10-year hike by 25 basis points or even 50 basis points. So mortgages are going to go up, spending is going to cool down even more, and America will slip into a deeper recession. Now you might be thinking, why doesn't the Fed just step in, print up a whole bunch of money and buy up China's reserves to keep rates low? Well, technically they can, but it'll make inflation even worse, especially back home in America. Remember, since 2020, the Fed has printed up over $5 trillion to prop up the economy, and we recently peaked at 9.1% inflation back in June. Now, just imagine if they print another trillion. We will easily get double-digit inflation once the money works its way back into the economy. But from the current trend, the currency decoupling is going to continue and it won't stop. Mistrust between China and the United States is at an all-time high. And according to Ray Dalio's measure, we can see the readings for conflict between the two countries are the highest ever. Almost 80% of Americans have unfavorable views of China today, almost double what it was back in 2019. Now the hate is building and it might erupt into something ugly. But the final nail in the coffin will be a decoupling of the US-China trade. But the big question is, can it even happen? Everything in the world is becoming made in China, right? We can see since 1985, the trade deficit has been growing and the US is trading more and more with China, even though they don't really like each other. In fact, in 2021, China is the third largest trading partner to the United States and exports the most goods to the US, over $500 billion worth. So if the US and China drops their trade by half or even just a quarter, what will happen? Now the shortfall will have to be absorbed by other countries like Mexico, Canada and Japan. All these products will definitely cost more because after all, it is not China. They all have stricter labor laws and they pay their workers much more fairly, so you can expect inflation to go up for everyday goods. Your computers, your furniture, your machinery, everything will go up in price. And this is the problem with the China-US decoupling, is that everyone will be hurting and businesses big and small will be affected. Across every single sector, we can see that China drives a huge part of the US economy. These include buying American-made goods and even Chinese students studying in American universities. We can see that China contributes a lot of economic activity from just these alone. And as decoupling continues, we could even see visas for Chinese students get tougher to acquire and more money leave American colleges. But what I think many of us aren't prepared for is how a lot of investor money will start to leave China for more safe havens. And we are already seeing it across the world. Chinese money is pouring into real estate and snapping up acres of land, and it's not going to stop. The further downhill China's economy gets, the more rich Chinese will start fleeing away. Now, just in 2021 alone, Chinese investors have poured $6.1 billion into US real estate, most of the time paying in cash, and this is going to keep real estate prices high even though we are in an economic slowdown. And in Singapore alone, a single Chinese national bought 20 units in a condominium worth over $85 million, and this insanity is only going to accelerate as China's economy destabilizes. So this isn't a situation of you win, I lose. If the Chinese economy collapses, everyone will suffer. The United States isn't just the only country that China trades with. Many international companies are already starting to pull out of China. Samsung have left China in 2019. They now manufacture their phones and computers in Vietnam. Tesla's Chinese output has declined thanks to the lockdowns, even though thousands of workers were sleeping in the gigafactory itself. So if you're wondering whether this is a great time to invest in Chinese companies or companies with huge exposure to China, you might want to think twice. Anything could happen. The biggest risk investing in China is what the CCP might want tomorrow. The rules today or yesterday don't really matter. However, the big wildcard is what the world will look like once the decoupling is done and once the collapse has happened, because once the dust settles, guys, Chinese economy will ultimately bounce back up again and its strategy going forward might look drastically different. Is China going to form alliances with Russia? Are they going to push for a new BRICS reserve currency? Will they use their gold to start backing up the Chinese yuan? And all these are really serious questions that need serious answers to, but we won't know until it's likely too late. And in the grand scheme of things, you and I can't really affect this decoupling. It might take 10 years or 50 years. No one really knows, but it's going to happen. And we are seeing the effects. Inflation is going through the roof. People are getting priced out of housing, and the US dollar is slowly losing reserve status in the world. And if you're invested in Chinese stocks, now's the time to monitor the China-Taiwan situation as well as what the CCP does. If they decide to crack down on big tech or any other sector, you could see your investment vaporize. If they decide to dump more treasuries at the expense of their own economy, we can start to see prices across the world start to increase as now Chinese goods are getting more expensive. So like it or not, you're going to be affected by this US-China decoupling, and there aren't many safe places you can run to, except for maybe hard assets like real estate and gold that will weather the storm, no matter which country comes out on top. So let me know what you think. Will the decoupling come within our lifetime, or are we wrong and all these US-China tensions will just blow over eventually? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through this recession. Thank you guys for watching, and I'll see you soon.